Hey everybody, Dave here at Freedom Investing. In today's video, we're going to go over my October dividend portfolio update, and we're going to look at the buys, we're going to look at the sells, we're going to look at the dividends received. We'll also do an update on Dividend Mountain, kind of talk about that a little bit, and well as a little bit of other news. So let's go ahead and get started. So you just saw Dividend Mountain, and there was a little bit of progress there, and that's partially due to the real estate notes. I talked about this probably about a month or two ago, that there was going to be a real estate note that was going to get paid back. Well, that finally closed, and I received a little bit over $78,000. Now, some of that was about $3,700 of that was a prepayment penalty, which I was supposed to be splitting with the person that sold the house. They just ended up giving it all to me, which I'm due anyway. So I got the whole $3,700 ahead of time. And that was supposed to, the prepayment was going to be gone by next year anyway. So that's kind of a bonus for me to get that money back early, plus get all of the interest that was due on it. And so that worked out in my favor. So that leaves roughly about $535,000 left in the real estate notes. So we're looking at the portfolio overview here, and right now there is $362,000 worth in this particular portfolio. Now this is across two different accounts, is taxable and tax deferred. And $29,000, like I had just talked about, is just cash that's sitting in the account. Right now there's 30 positions in there, and yes, I did cut some positions out, so we will talk about that. Number of shares, over 4,000 shares now. Account weighted dividend yield 3.57%. Account yield on cost about 3.78%. And the average weighted 5-year dividend CAGR is rough about 8.19%. And the average weighted beta is about 0.80. So that's right on target, right where I want to be. I try to keep the average weighted 5-year dividend CAGR right around 8% or higher. And I try to keep the yield at least 3.5% or higher as well. Since I did cut out 4 positions from the last video, I did make this area right here a little bit smaller. And then I had some kind of free space there, so I added the ex-dividend kind of in there just to let me know what is going ex-dividend next, and that's just kind of auto-sorted there off my portfolio. So right now the account goal is $1 million. We talked about this many times in the past. Remaining to goal is 637,000, and percent to goal has gone up to 36% as well. So we're looking at the positions here, and these all are sorted off of portfolio market value. And so should be least, so Chevron is the least in there right now, and the highest one in there, highest portfolio value is Vanguard VYM. So I'm up to over 1,080 shares at this point, $90,000 worth in VYM. And then that leaves Microsoft, the next down one there, and then JP Morgan, Apple, Johnson & Johnson. And I kind of bolstered some of these up here with some sells that I did and with the cash that was in there. So I just wanted to kind of get things where I want them to be. It wasn't right to have Caterpillar or something way down here and then have, Colgate. Actually, I probably want to build that one up, but some of these other ones I just couldn't see having more value than like Microsoft or something like that, right? And also we'll look at the allocations, because that's kind of what I'm going off of as well, and try to keep the allocations correctly. But I want to kind of build these up to where I want them to be and don't want them to be underweight. So let's go and look at the dividend increases for the month of October as well. Scroll up here, and so we do have AbbVie that had a dividend increase of 10.17%, which is about half of what we would expect it to be. Typically it's around about 20%, but still we are in the middle of a pandemic, plus the drug companies kind of got hit pretty hard, although AbbVie kind of went on a run recently because of the elections. But we did get a 10.17% increase, so I'm not going to complain about that. So let's go ahead and clear that flag there. 5.20. Let's scroll down here. Here's another dividend increase, and that was on McDonald's there, the Golden Arches. And let's see, we got a 3.2% increase on that. and that's about half of what we would probably expect, maybe even a third of what we would expect. Let's just go by the 5-year dividend CAGR here at 7.6. So that's about half of what we had expected it to be, but we are in a pandemic and dining was kind of shut down. So they probably had drive-through going and all that, but still, they probably had to cut some stores out and close some stores and stuff as well. So it is what it is. I haven't really dug into the research or on the fundamentals on it, but let's go ahead and clear that flag. So that's 5.16. Okay, that one's cleared and there's no more dividend increases at this point. So for the month of October, I did cut 4 positions out of the portfolio, so I'm down to 30. I'm liking where this is at right now. Maybe long term I might get rid of a couple more, but right now I don't have any plans of getting rid of any stock positions unless something goes majorly crazy, either up or down, and then maybe I'll reevaluate. But right now, 30 is like right where I want it to be, and that's including the ETF in there as well. So what positions did I cut out? And we are just looking at my Schwab account here, and so this is just basically for October here, so October 1st through October 31st here, so it's all the stuff that got generated for that. So I did get rid of ADP out of there, okay? I did get rid of a little bit of CAT, just a few positions, four shares, not very much. Cost, don't worry about that. I was just kind of testing out the stock slices from Schwab, so that was the only reason that was in there. I'm kind of answering a question for somebody that left a question on one of my videos. I did sell off a little bit of Intel. That was 93 shares that I sold off, so that left 100 shares in there, and that was before the big drop that we just had, so it was up in profit, so I took that, so it's $322 in profit there. I got rid of Leg, and that was $1,100 in profit, and then I got rid of the Cisco. And the last update, that got called away, and I added it back. So what I did is just went ahead and just sold that position out and stuck that money into VYM, and then I just sold off a little bit of position into Verizon as well, just to kind of lower that down because it was kind of a little bit high in my portfolio. And everything that I sold here most likely went into VYM, okay, and that's the reason why I sold it. If I was probably up, that was $2,500. There is some covered calls in here, probably about $200 or so about $2,300 in gains here, and all that went into the VYM. And just to note, a lot of these positions I put in this portfolio was because we're around the March 23rd low or maybe just after it, and I added a lot of these positions in the portfolio. Now a lot of these weren't intended to be long-term holds for me, so I figured why not take some profit on it. I can offset some losses as well with that profit. So that all worked out in my favor, just to build up a little bit more cash into VYM, get a little higher position in there for covered calls. So will I ever add back these positions back to the portfolio? Maybe. If we have another market crash or something like that, or one of these stocks tanks, then I have the option to add one of those stocks back or all of them back, or maybe even new positions, I don't know. But for now, I took this profit and reduced some risk there and built up my VYM position for covered call purposes, where I'm generating roughly about 6 to 7%, including the yield, including the covered call return per year. So that was the plan long term. Now it was really just to sell covered calls against these individual positions, but I talked about that in previous video, and it was too much work to do covered calls on all these smaller stock positions. And what I'm talking about when these smaller stocks is just these $30 and $40 and $50 stocks. That's what I'm really talking about. This dividend portfolio makes over $900 in average monthly income. Go ahead and like and subscribe and hit that bell notification. So here we're looking at the buys that I did for October, and a little bit of this is misleading, just because, like I said, I sold out of some of these positions in here and then bought more stocks with that. So that capital, the 50,000, is probably not quite accurate. Now I did invest quite a bit of capital as well, free cash that I had available on the account. But like I said, some of these positions, I sold out of Leg, I sold out of Cisco, SYY, and I sold out of let me see, Walmart and ADP. So all that went into other stocks here. Obviously, VYM, I added quite a bit of capital there. That was over $39,000 I invested into VYM alone. ExxonMobil, I did an ExxonMobil. Go ahead and take a look at that video up here. And I pretty much said I was going to bolster that particular position up. And I pretty much lowered it from like a 40% decline down to in the 20% or somewhere around there. Matter of fact, why don't we just look real quick here. Let's see, ExxonMobil, so it's down to 26% now, and it was down over 40%, close to 50% at one point. So I added capital to that. I just feel like ExxonMobil is a good purchase right now, so that's the reason why I went ahead and bolstered that position. I added some more KBM there, or KMB, all right? That's the ass gasket maker, okay? That's those little toilet gaskets that go between your butt and the toilet at the airports. And guess what? I know they tanked recently because guess what? There's nobody at the airports using the ass gaskets, all right? Went ahead, add a little bit of cash to J&J there, $1,442. A little more capital to Procter & Gamble, a little bit more capital to 3M, a little bit more capital to Colgate-Palmolive. Built up my O position a little bit more. I always add to O pretty much every month. In the leg here, I don't remember adding to that, but I probably added to it, but that got sold. It's not in the portfolio anymore. And then SYY, that got called away. If you remember back in an older video, like I think it was last month, it got called away, and I pretty much bought it back on that Monday. And then I decided to get rid of it, and so that's no longer on the portfolio either. Cost, like I said, was just a test for the stock slices to test something out for questions somebody had. So $50,000 is a little misleading, but I did add a lot of fresh capital into new positions, not new positions, but into existing positions as well. So here's the stock allocation. So this was updated in late August, and so I got the new one there. And we'll just look at my particular weighting here compared to the S&P 500. So consumer staples, we're about 19% there. It is a little high, but I like that particular sector because it is pretty good. It's pretty defensive. Utilities, I'm always kind of high end. Those are kind of like bonds, plus it's very defensive as well. Financials, I'm a little light on, and I'll really only have JP Morgan in the account right now anyway. Maybe I'll bolster that up, but I just don't want it to be the #1 position in the portfolio. So I'm kind of happy with where it is right now. Maybe I'll add another stock at some point. I don't know. You know, if you looked at my older portfolio, you do know that I had Wells Fargo at one point. Once they cut the dividend, you know, they slashed it to pretty much almost zero, 30%, you know, down to 30% or something like that. So I just cut it out of the portfolio. Healthcare, about 9.6%. That's pretty low as well. But I think that some of these healthcare stocks in here were booming in the last week or two, so that has come up quite a bit. Materials is kind of low here, and I really only have one material stock, and I think that's APD, which is up like 30%. So I just have a hard time adding to it when it's up 30%. So I'm not really going to add to it. Real estate, that is the Realty Income. I did a video on that if you want to take a look at that up here. And I did that one recently on their earnings, the recent earnings. Although I think they had earnings, I probably should do an updated video, but go ahead and take a look at that video. Realty Income, that's the only real estate I have in there, 3.4%. So that's pretty much right on target. That's a little bit higher, but as I build some of these positions out, that should go down. Energy, that has gone up quite a bit since the last update. So we're at 4.5% right now. And over here we are at 2%, so that's almost double. It's pretty much where I want it to be. I probably won't build that up anymore. Maybe I might add to Chevron just a little bit, but we'll see. And see, industrial 7.8% there. So industrial's it's still a bit underweight, but that's pretty much. I think there's only 2 stocks in my portfolio. And that's 3M and I think Caterpillar. So in a Caterpillar just tanked. Maybe that'll recover at some point and go back up, and then that'll probably raise a little bit. Consumer discretionary there, 8.6%. So that's a little bit light as well. Consumer services, that's really only AT&T and Verizon, and that's pretty much where I want it to be. Maybe I'll add a little bit to AT&T, just a little bit, but I really don't want it to be any more higher in my portfolio. Information technology has come down a little bit just because I took a little bit of capital out of Intel, sold it off and then added it back, and now the stock is down, so that is down a little bit. Plus I got rid of the ADP, okay, APD, ADP, Jesus, get those all confused all the time. So that was The payroll company, I did dump that out of the portfolio. It was up pretty big. Took the profits out of there, put it into VYM. So we're looking at the dividends received for the month of October. And really, we've received, what, 8 dividends here for a total of $348. All right, so we received one for Coca-Cola, ADP there, Kimberly-Clark, Altria, Leg, Realty Income, Cisco, and then Cisco, the food company. $348.47 there. So let's go ahead and update the dividend-o-meter here. So at 2020 dividends here, we'll update the $348 into the dividend portfolio, and that just updates this particular line right here across October and for all the dividends received. So let's go ahead and run that now.
Snoop Dogg.
All right, dividends have been updated in the dividend portfolio. So let's go ahead and take a look at some of the statistics here and see dividends received. So that did write all those across this line right here. So we should have a $348.47, and we do. So there's Coca-Cola, there's a Cisco, there's the Leg, the MO, the KMB, the Realty Income, and then we have the ADP there. So those all got added, and it's nice to look at the O here because that is a monthly payer and just kind of see that go up every single month there. And while we're sitting in here, let's see, I did put 2021 in here already. That's all ready to go, and I did cut out all those other positions that were in there. So that going forward is the 30 positions across the top right there, and that's all ready to go. I have no plans of adding any new positions to the portfolio for 2021, but you know, you got to remain flexible because things like that, you never know what's going to happen. Maybe there'll be some good deals, maybe we'll add a new position, but for right now, 30 positions where we're going to be at. So looking at the dividend charts here, the dividend meter did go up to $4,339 received for the year to date for 2020. And then we got dividends by the month there. October is a small month, and we're right at there, $348. Last month was a humongous month. And then December will be a big month as well. This is compared to 2019, that really wasn't a dividend paying month for me. Dividends by quarter here, so we're in Q4 right now. So right now we are at $348 because this is the first month in the quarter. And that should be a pretty big quarter compared to last quarter, which was $2,277. So I think we're going to eclipse that for Q4. And then dividends by year, $4,339, and that just kind of eclipsed 2019. And as I mentioned before, it really wasn't a dividend paying year for me because it really started this portfolio in early 2020. So number 7 here, the options income. What I'm going to do is just cut out the IB cash secured put update in this particular video, but I'll put the covered call update in this particular video. So the IB cash secured put update really does not belong in this covered call / dividend update video. So I'll probably end up making separate videos on that outside of this particular update. So I did receive about $280 in covered call income for the month of October. So here are all the covered calls. Now some of these expire actually next month, but I put them on in October. So they're just in here because it's hard to filter in Schwab, but this is all of the covered calls that I did. I pretty much do an Apple once a week. There's some JPMs there, and until it actually sold off, it was hard to get any capital out of there because of my cost basis, but I started doing that one again. I try to do at least one Microsoft a week as well. And then the VYM, I got 4 contracts for that, and that was $117. And looking at my portfolio right now, we do have some covered calls open right now. We do have a Realty Income right there, and that was $16 I received. That'll expire in 15 days. The VYM, I currently have 9 contracts going on that right now for about $129 of income. That's actually a lot lower. That 1.6% return annually there is a lot lower than what it's normally going to be. It's just because that actually, was going to be 36 days, and it's going to go through the election period, which all the election period's already done. But so I put that on before the election, and then it went through the election, and I just didn't know what was going to happen to the stock market. So I went ahead and even went safer up to the 90, and when I put it on, it was $83.70. So it was a long ways away from being in the money. And at this point, it's got 15 days left on the contract and a roughly about 7.2% from being in the money. That's 15 days left. Most likely that's going to expire, and I'll just close it out and we'll start open another one. And because I've built up my VYM position here to 1,000 shares in that particular account, I can sell 10 contracts now, okay? And if you haven't seen the VYM video where I decided, why I even picked that one to go, to begin with for covered calls and all that stuff, go ahead and take a look at that video up here. And that tells you the exact reason why I picked VYM over a couple other ETFs for covered call purposes. Okay, and that does pay about 3.5%, so it met the criteria, although my yield on cost of 3.6%. The 5-year dividend CAGR on that is 8.29% there. And you add in that yield, plus you add in the covered call income, which is about 2 to 3% or so. That's a pretty good substantial money maker for me. So going back to the covered calls here, I do have one on Microsoft that expires tomorrow. Today is November 5th, and today is Thursday, so that will expire tomorrow. I will likely open another one on Microsoft tomorrow, and I kind of spread those out a little bit there. I didn't do one on Apple last week just because I didn't know what was going to happen during the elections, and Microsoft I could have got away with just because it was a lot lower. So we'll look at selling another Microsoft tomorrow, and then next 15 days or so when those close out, I'll go ahead and open up 10 contracts, maybe 11 contracts by then, who knows. Maybe I'll actually add more capital to VYM between now and those 15 days. Let's set a new goal of 1,000 in monthly dividends for the next update. Go ahead and like and subscribe and hit that bell notification. So looking at my Schwab account, let's just see what we're kind of due for November here and December for the rest of the year. So right now for November, we've already received $277, and we have another $244 left to come back for the rest of November. And then we also have, let's see, December here of over $2,000, $2,030 is what we're looking at getting. And I think there's still some ex-dividend dates left as well, so I could probably still increase that as well. For the next 12 months here, that kind of brings up $987 on average monthly income, over $11,846 of income for the year for 2021 going forward. Obviously, I'm going to continue to add in more capital as well, and we'll get that up to $1,000 maybe by December or so. So that wraps up this video. If you have any comments, questions, or concerns, go ahead and leave a comment below. Go ahead and like and subscribe, and we'll see you in the next video. Thanks for watching.